Hello, everyone. Welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. I'll be sharing with you this week's slide. As you can see here, we're expecting to have about 8 of 11 of the sectors in the economy to contribute to earnings per share this next quarter. Actually, I say this next quarter when the second quarter results come out for last quarter. You can see that second quarter 2023 was just under $55 of earnings per share. That's projected to be $59, almost $60 earnings per share. That's about a 10% increase than it was the prior year in that quarter. As we look at that, what it's really showing is which areas of the economy are doing better than others. Now, we don't get too concerned about trying to pick sectors or trying to figure out where should I put my money to make sure I have the best earnings per share, but it at least kind of shows what's going on. You can see that information technology, financials, healthcare, communication services, consumer discretionary spending, utilities, and consumer staples and real estate are doing okay. The struggles this last quarter were industrials, materials, and energy. So you can kind of see where things are moving. Technology continues to lead the way, but I think a 8 or 9% increase in earnings per share bodes well for the economy. How does this affect our portfolios? I think it's important to remember and understand that as you look at what's going on in the economy and you try to figure out, okay, are things going to continue to go this does bode well. It doesn't mean that things can't turn. There for a while we were wondering, are we going to have a soft landing? Are we going to be able to get inflation under control and not go into a recession? As of right now, that looks pretty positive. The Fed is talking about reducing interest rates either later this year. We were thinking 3 or 4 times this year, but they've had to hold off on that because inflation continued to be a little bit higher than expected. But it does appear that things are looking pretty good. Obviously, 2023 was a great year. 2024 is starting to look like a pretty decent year as well from the market standpoint. So I think it's important to kind of understand what's really going on. Obviously, and these are generalities, and they're markets as a whole. It doesn't mean in where you live that these are exactly what's going on, but this is kind of the market as a whole as we look to move forward. I think it does look good that there may even be some continued upward trends, and we'll kind of see how that affects going forward. But ultimately, still the goal is to have a globally diversified portfolio. Make sure you're taking advantage of all areas of the market. Have the proper amount in fixed income and bonds to be able to weather any storms that we may see, because we know those will continue to happen, and go from there. So feel free to share this with anybody that you would like to. We're more than happy to answer any questions at any time. I'm making this presentation from the wonderful area of Southern California, so enjoy your week, as I know I will, and we'll talk to you soon. Thanks.